Hey traders, Nick Shaheen looking at the tiny earnings reporting day on Thursday, 10/29. Are you kidding me? Whose freaking idea was that? That's crazy. Okay, so we've got small companies known as Facebook, Apple, Amazon, Google, and Starbucks all reporting in one day, one afternoon, probably in the span of 1 hour, 1.5 hours. Okay, let's see. First of all, good day in the market today after a drubbing yesterday. The strength is coming from these guys, which makes me worried a little bit about the market's the next trading day. So if Facebook is up a zillion today, what if it's down a zillion tomorrow? That's the only prop today. So that's the kind of concern. Hopefully they will roll into the rotation thing that's been going on into the small caps, who are barely up today flat. So they are underperforming. So maybe the money will flow out of them into the small caps. Small twist though. Small twist is next week. Next week is a very binary week. We have a huge thing going on, the election, and going into the weekend before that, we might have sellers. Somebody might want to flatten into the weekend. I don't know. We'll see. That's the logic, but who says this is a logical time? All right, let's start with the beast. Amazon. This is Amazon 2-hour chart. Every candle is 2 hours. We can change time frame. I will in a little bit maybe. So I said I got a note from somebody in the chat room said I see a potential cup and handle. Said, oh yeah, okay. Here, I just drew it. I see your cup and handle you're talking about. He sees this as a cup and handle where they might migrate over here. But in case of a headline, it's going to either go. So the cup and handle is probably there. But so is a head and shoulder, which have ominous results that could send it below 3,000. I love the company. This is the best company that's ever existed, best CEO that has ever been. I don't care what you say. They grow 30% a year every year for over 10 years. Hello, that's amazing. So they said they're going to blow the report out. Yes, I'm confident they will deliver good numbers. Confident. It doesn't matter. It's still a coin flip. The reactions, the short-term knee-jerk reaction to the headline is more to do with expectations than actual results. I bet you Bezos himself could not tell us how the stock will trade the next day. And he knows the results inside and out. He knows what they're going to say and what questions they're going to probably get and how they're going to say them, answer them. So short term, it's a coin flip. If it dips, I'll buy it. I'll go long it. Going long big time right here is pure gambling, in my opinion. If I'm long for the long term, then I don't even look at the earnings because I am confident that they're not going to change the story. If it falls, then fine. I'm still long. I'm not going to sell my shares. If I'm smart, I'd sell covered calls against them into the nuttiness of November because the VIX is high, the skew is high, and earnings. Hello, boom. Perfect time to sell some calls, covered calls. Never naked calls. All right, so that's Amazon. It could go either way. It has a great setup. If it dips, I'll go long. Longer term, there is this ominous, big, giant head and shoulders brewing, and this area is about the neckline for it right there. So if this is gone, guess what? It's going to go down 600 points from there. Now I'm like getting hate. I can feel it. I can feel the burn. This is the setup. It doesn't always come true. I'm just saying that if you remember, just a few months ago, it was not only under 2,000, it was under 1,300. So it's not that crazy. So let me see here. This is 1 year. 1 year ago, it was 1,750 within 1 year ago. And now it's 34, 32, 3,300. And when I said if it falls to 2,700, what's the big deal? This would be a all-in buy zone for me. So support, buy the dip here, support. There's plenty of support. Should the schmutz hit the fan, we don't know what's going to happen. We might have fighting on the street. We don't know. So here's the tiny little head and shoulders that we just talked about. Here's a tiny little neckline that can break out. Here's the giant thing that could happen if the reaction is bad, and then next week is bad, and then the government will tumble. I'm exaggerating. but it could happen. We don't know. I'm just laying it out. So I don't short it. That's for sure. If it dips, I will go long it. How about that? All right, so that's one guy. Facebook, I'm long. I bought longs yesterday for the earnings. I'm going to book them. Leave maybe a runner or two. So I love the setup. Let me go down to a 2-hour setup. So this is the same setup as before. Knocking on, it's like an expanding range. And usually if you break out of the upper end, you go. What do they say? Buy the third touch or whatever. So that was the place to buy it. And yesterday I did. I stupidly just took a debit call spread for January, I think, at 305. So I didn't need it to go to 305. I just needed a burst. And I got it today. And it's up 5% ahead of the earnings. So I'm going to take it and then leave some fun money at stake. I don't think it's going to fall, but it could, because it's easier to fall when you're going into it up 5%. This cluster worries me, but it's too far back almost to say it's going to provide immediate resistance. Besides, one could argue that this neckline right here, if they close above it, has triggered some sort of a, I don't want to call it inverse cup and handle, cup and handle or inverse head and shoulders, but it's a bullish pattern with a lot more upside to go, about 25 to 40 points. Depends on where you draw the neckline. There's plenty of necklines. There's one down here, one they're working on here, higher lows. The bull's in charge. Higher lows, knocking on a roof. Just give them a little bump and they're gone. I think they'll blow the doors off of the numbers. That's my opinion. But that doesn't matter. What are they going to say? What are people going to ask them? Is there a hidden hiccup somewhere in the regulations? Have they been subpoenaed for something? I don't know. So we don't know what they're going to do. I love it on dips just like Amazon. Super, it's killing Google. Speaking of Google. Okay, so I can also say there's a neckline right here at 1634. Above 1634.35, it's going to challenge this peak right here and then beat it. That's the statement. Down here, it's trying to base off of this. This is a good consolidation, and this is the September dip that we had. Nice fat consolidation. What it's got going for it is its volume profile. Let me zoom in a little bit to take out all the junk before. So it's going for it, but it's going against it. So this is the volume profile for this period of time from September on to now. So it considers this dip and the recovery from it. Okay, so the sandbox is from 1470 to 1634, almost exactly. What does that mean? This is where they traded it the most. It's actually extended this down to 1420. So it has a lot of support below, but it has this orange line. What is this orange line? It's the busiest point. This is where they traded it the most. This is where bulls and bears loved it absolutely the most. So it stands to reason that going into it, it's going to act as resistance. There's a gap that's trying to fill. I don't believe that the gap is a trigger for me. In fact, from trend line perspective, I think there is support. There is resistance as well, not just from the volume profile, but from what I'm seeing. So this is the least of my favorites. Losing this will be like an inverse cup and handle. What is this? 1508.09. We'll probably retest the 1440. So I could bet on it down here. So prior resistance, now forward support. I can move this over here. Yep, that works. But if you lose this, it's going to go lower. Let me see here. I haven't looked at the daily in a while. This is the one I just moved. Oh, okay. So you can see here, not to scare anybody, but the bad scenario, like the Amazon bad scenario I had, would probably, they'll try to hold here, and they'll probably come down to here, another pivot level. The target is a little bit lower. What is this red line? Okay, not much. A trend that they pierced in April, well, yeah, that was the world ended. But you can see it's still a bullish chart. Higher lows, nowhere near the lows, above a pivot. Look at this candle. What the hell is that? So I'm going to put a note here. Massive weekly doji. I don't know what to do with it. Probably buy the dip if it gets there. What is this here? I'll extend that. Nope. That one. What? Never mind. I'll do it later. So there is a downside scenario, but there's also level scenario. So I would buy the dip fiercely at 1280, anywhere under 1300. Even though I don't like the company, the price chart tells me it's playable that way. Yeah, brave guy, right? Apple. Let's zoom in to 120. So I had notes on Apple, bought the dip in Apple, but it was at 103 right here. I made videos on that. You probably saw. And then it rallied, broke out, fell short of the target, but that was a great breakout. Failed exactly where I thought it would fail. In fact, this was my trigger. I don't know if I put it before or after, but it is still my trigger. If for some reason they can go above 125, whee, gone, the moon. So now we have a tighter range. I said buy it here on the breakout. So if they break out of here, same reason I'd buy it here. The breakout is coming. They're going to challenge these resistance zones. This is a pivot area right now. If you look at it, just look at it. Zoom out. Sit back in your chair. Look at it. Where is the pivot area? Let's test it. If it's a pivot area, I should draw a left line, and it should be like a split of levels. So here they tried to hold it. They failed. They failed to rally. They broke out from it. They tested it, and now they're back at it. So it's a pivot area. So look, it looks like a head and shoulder, just like Amazon. If they lose it, they're going to fall about this much. Not a big deal. I say buy it here, I say buy it here, and if this fails, this one right here, I don't see a reason why this should fail, down to here. I would be buying into this with a stop loss if it's a trade. If it's an investment, I wouldn't even stop myself out because I know my bottom is right here. This is Apple, people. Yeah, what kind of a turd are they going to deliver that will cause me to lose faith in Apple down here? I shouldn't be investing in anything. And I'm not a fan of Apple. If you know my history, I do not like Apple. I don't like Cook. I think he's mediocre at best, and he gets all the credit. He's not even a good operator. Nothing is on time. Everything is back ordered, and there's always issues with shipping and delays, and he announces things that he can't sell. So anyway, it's problems everybody would like to have. But for now, it's a solid company. You can't bet against it down here. Are you kidding me? I mean, Steve Grasso says it's going to whatever, 89. That's where he'll buy it. He's going to be waiting a long time. If we have Apple at 89, we have zombies in the street. That's my opinion. So who did we miss? Facebook, Amazon, Apple, Google. I think I did the Starbucks. I haven't looked at Starbucks in a while. So similar concept. They're bouncing off of a pivot zone. Look, this we didn't do volume profile. Yeah, so this orange line is a contention level. I should zoom in a little bit, but I don't. Yeah, I guess I will. So it has a couple of stints. I usually like to catch one move with a volume profile for it to be really truthful. It's at a sticky zone. The whole zone is sticky. So this verifies the fact that we're looking at the right range. So last time I looked at the open interest for Apple a couple of days ago, it looked like it was impossible for it to rally. It was hard. So it might be a fizzle, like a small bump, a small dip, and selling the straddle probably will work the best, but only if you know what you're doing. That's my opinion. Starbucks. Okay, so I didn't look at I haven't looked at Starbucks in a while. Same thing. What is going on? Sorry about that. This tool is TradingView, and it's acting up on me. Okay, so they need to hold this level. This is the point of control for this period of time. It's not a hard floor. If they lose it, they're going to try to hold this one at 85. So if I'm long, I'm not panicking out. If I'm nervous, it's a lot of money, I'll buy a cheap debit put spread or cheap puts to cover me for the next 3 weeks. This way I can sleep tight knowing my family is protected. All right. Okay, so on the way up, it is facing resistance. It has a gap all the way to 90. So there's resistance here, there's resistance at 90 and at 91. Each of them is a mini trigger. The big trigger is above 91. So if I wanted to do anything with it, what is going on? I would buy the breakout up here. I'm going to say open air. I don't know if it is. It's open close enough to open air for me for time-wise. And down here, losing here would be a inverse cup and handle. to 85-ish with support down there. Hopefully I'll remember that. All right, I'm going to zoom out now one day to see if it is open air. It's not open air, but it's close enough. So the only failure is up here. So this is interesting. This is a company that relies on people in the stores, right, for coffee. It got killed and it recovered completely from COVID. So now it's back to the COVID level. So it's back into this area. So it's like nothing happened. Bulls are definitely in charge as long as they're above 86-ish, 87. If they get to 85, then they'll be fighting over control for the next couple of weeks. And if they come back from that, the bulls can retain the reins. Otherwise, if it dips below it and continues towards 82, then the pops will be sold. Okay, so I got interrupted twice. I don't know where I left it, but I think I said what I want to say. So Starbucks is not the least of my favorite. I would buy it into 85. I would buy it into 82.50 through 80. I would not sell out of it if it falls there, if it's an investment. The markets could collapse, we don't know. I happen to think that everybody's looking down. It's like driving in a car. When everybody's driving and everybody's looking out for an accident, what are the odds of getting into an accident? Low. When nobody's looking, everybody's screaming, radio's blaring, everybody go 100 miles an hour like we were a few days ago. And I'm going to share something with you. All right, so this is a tool that I recently started learning, and it's called the Market Structure Edge. It's basically sentiment. I didn't have this edge before. I didn't know anything about sentiment except for what I hear or I feel. So now I have a metric for it, broad market sentiment. So the idea is simple. I'm not going to get into the science of it because I don't know it. I just understand it. So if you click on it, this is the S&P basically. And just a few days ago, it was up at 8. The scale is 1 to 10. 1 is everybody hates it. Nobody loves it, I should say. 10, everybody loves it. So the more nobody loves it is the better upside situation, right? So the lower the better for an upside swing. When it's up there, it means where's the incremental buyer going to come from type of a deal. Just a few days ago, it went over 8, or it was 8. Let me see, where was it? 8. It hit 8, and I was like, why? We're going into huge uncertainty. Why is everybody loving the market? I don't get it. So since then, it's come down, and now it's at 5, below 5. The range that they say it should be inside, 4 to 6. So right in the middle of the range. So now it's a lot more sane, and it could go either way. So now the sentiment is less of a burden. This is 6 months worth of it. It should be here most of the times. They say that's where it is. So let's test that. Let's go to 3 years. So eyeballing it, maybe you've got outliers, but it looks like the bulk is in here. So I'm going to take them on their word for it. So far, it's suited me well. It served me well. Not as a trigger yet. I'm not that good at it. I think today I did one as a trigger, but that's a different. It's an experiment. So this tells me that there's less risk from the overall market. Okay, so let's see. They have a FANG one. I'm interested. Okay, so that's good. So this is FANG. I think it's FANG plus like Microsoft. Let me see who it is. Tesla, Netflix, Shopify. I wouldn't put Shopify in here, but so both Google's Alphabet. Sorry. Okay, so back to the dashboard to see the overall picture on that. Where is it? FANG. So what is this FANG telling me here? That now the sentiment is 3.2, well below 5. So the concept there, the trade they love, is the mean reversion. As it gets to 5, now people are loving it again, and then you get in, and then you get out when they love it too much, and they come back to the mean. So they revert to the mean on the way up, they revert to the mean on the way down. So you're supposed to go in at 5, get out at 5. But that doesn't work like that for every stock, but that's the concept. You want to buy it at the low sentiment and get out of it before it tapers down from everybody loving it. So in this case, 3.2, that's good odds, in my opinion, just visually, not having tracked it. This also is another like fuel to the fire. The lower, the better if you're getting in. Because if you think about it, it's like there's not a lot of it. And when people start want it more, then there's going to be grab to it, kind of like a short squeeze. The way they explained it is this percentage is the percent of the total volume the day that comes from borrowed shares. So if there's a lot of this, then the shares are everywhere. Then there's not going to be a frenzy. Whereas if it's a low number and the trend line, this says it's below the trend, so that's not a hindrance, and it's more likely to be extra fuel to the fire. So there, I just did an extra lesson on this. Well, I put lesson in quote because I'm a student at this and I have no expertise in it. I'm building some. It's a new tool that came out last year, so I think there are a lot of us out there that are trying to make it work. Give them a shout. And I'll try to put the link in the description there. And I don't get paid by them, by the way. I just get to play around with it. They do have a free trial period, so give it a shot. But get the concept first. Watch this video a couple of times before you get your trial, because then you hit the ground running so that the 2 weeks will count for something. All right, Nick signing out.